This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry, Lutz, and today is 4/7/21. This is show number 240. Well, Nick, Jamie Dimon says it must be true, right?
Oh, absolutely. Jamie Dimon has come out once again, and he said that basically in his shareholder letter, he said equity valuations are quite high, but a multi-year booming economy could justify it. I mean, if that's not the writing on the wall, I don't know what is. He also said the boom could last until 2023. So here we are at a market high, and you're just getting probably one of the bigger CEOs out there from JP Morgan basically saying the markets are going to continue to boom till 2023. I have to chuckle at this. I've always learned to be careful when you hear this type of talk from a big shot CEO at market tops, and it never seems to fail.
Yeah, beware of happy talk, right?
Absolutely. I couldn't say it any better. When they do this, honestly, you just be very, very careful when you hear this kind of stuff at extreme highs like we're at now.
Yeah, for sure. So today, what's the market doing?
Well, today it's pretty quiet out here. The Dow just went positive. It was basically flat. It's up 50 points. You have the NASDAQ composite up a little over 0.1%. The S&P 500 is up less than 0.2%. The Russell 2000, the big loser, down about 0.4%. So it's a very, very quiet day out here. Volume is very, very light right now. And basically, it looks like traders are waiting for the FOMC minutes, which are going to come out at 2 p.m. That's where the Federal Reserve will basically reiterate what they said during their last meeting. And, traders look for little hints and clues. I'm not sure anything's going to come out of it today, but a lot of investors like to hear what the central banks have to say. So, we'll see what comes out. And, everybody should note, though, that this is not an exact transcript. It's just a recap of what they're saying.
Yeah, so it's really, there's no news here, is there?
I don't think so. But you never know. Maybe they slip in a line here or there that they want you to hear, and that could, sway markets one way or the other. But I don't think there's anything that big that comes out of it. I mean, after all, this guy holds a press conference after he releases the rate decision, which has been nothing. It's just been more QE. And, I don't know what else they could really tell us. The pedals to the metal here, they're printing, endless amounts of money.
Yeah, isn't that the truth? That's what it all comes down to, is endless money printing. Gold and silver down a tick, huh?
Yeah, gold and silver basically flat today. Gold futures, as we speak, are down $2, sitting at around 741. Then you have silver today down 3 pennies. I don't know if we can make too much out of it. Gold miners today, which have been on a tear, today just down about 19 cents on the GDX. So very quiet day out here, really, overall.
Yeah, it's almost like it's a pre-holiday trading day. It almost has that feel to it,
I gotta say, I'm gonna agree. I agree wholeheartedly. It really is just very, very quiet, extremely quiet, almost too quiet. It's eerie. But I guess that's sometimes what happens after you get that big Monday surge.
Yeah. So everybody just sits back and waits, huh?
Yeah. It kind of seems to be what goes on lately. We could talk about that Archegos though. That is quite something. We're getting more and more news out of that. It looks like that hedge fund was so highly leveraged, maybe even 10-1. It's incredible. And now I think we're going to get some news out of exactly what they were doing. So that'll be interesting over the next couple days. So maybe that's why the markets are so quiet.
Well, the story's kind of over though, isn't it? As far as the market's concerned,
it seems like it. It seems like it, Kerry. But we're seeing now that Morgan Stanley got out unscathed. We know that Credit Suisse and Nomura got crushed on it. Credit Suisse, in fact, had to cut their dividend. They had to suspend their share buybacks. So there could be more. There could be more to this than meets the eye. We know that they were highly levered. We don't know the exact numbers yet, but I think as more and more of this unfolds, we'll find out, really what's behind it. Don't forget, we also have hedge funds that aren't really hedge funds. They invest in other hedge funds. So how about if those guys got hurt too? So there could be a lot more. There could be some aftershocks from this story.
Yeah, they call them feeder funds, right?
That's right. Fund of funds, and they invest in other hedge funds. You just got to chuckle at this stuff, but this really goes on. So we'll see if there's some real severe aftershocks. I just don't think this is going away that easily.
Really? Okay. Well, the Fed is want to sweep these things under the rug, aren't they?
Yeah, and that's probably why we saw the March 26th surge. If anybody was trading that day around 3 o'clock in the afternoon, the NASDAQ was getting beaten up pretty big. The S&P was slightly negative. And then right around 3 o'clock into the 4 o'clock hour, the market just surged. That was a Friday. I mean, we had one of the most powerful rallies I've ever seen. And obviously, the news about Archegos came out later that weekend. So now we obviously know they juiced that market there just to keep that, keep the fear from becoming systemic once the news was released on Sunday.
Yeah, situation normal, all effed up. And, when you watch them do their games, we've been talking about these Friday afternoon PPT rescues. They're happening like with regularity.
Yeah. Absolutely. In fact, the market has caught on to it now, where the market actually wants to buy the market on Friday. So no matter where the market trades down to, there's a buying opportunity there because the market feels like, hey, they're just going to have to, rip this thing higher into the close.
It's really like a Greenspan put. Every Friday there's one, right?
It really is. That's exactly what it seems like. And the markets have caught on to that now.
Yeah, the markets are wise to the games that are being played, but that doesn't mean anything because they keep playing them, right, Nick?
They just keep playing the fiddle. The music plays on. This is a 1 year of a decade, though. So there's going to be other disruptions that come in. We'll see how long the central bankers can continue to save the day. But right now, I mean, they really are probably the most, by far the most important entity out there because they can print endless amounts of money. So eventually the marketplace will have to put an end to it, but it's going to take something in the market to do that.
Yeah, and it's got to be a situation like a Lehman type situation where they just decide the cost isn't worth the pain that's going to happen from it, but then they wind up with a systemic failure, and then what do, right?
Well, that's it. And then when that happens, I don't know if they really have the bullets any longer with the amount of money printing that we've seen, with the amount of U.S. debt now at 30 trillion. It's rather remarkable. I'm not in the camp that they have a whole lot of bullets left. I mean, sometimes as we say that, they come out with more ammunition or they come up with something new. But at this stage of the game, you really have to say how much more is out there that they can really do to keep the fear from creeping in.
Yeah, exactly. At some point, they're going to reach the end of the road. The can will have been kicked as far as it can go, and then it's going to go over the cliff. And then the fun is really going to begin, Nick.
Then the fun is really going to begin, and then we're going to see exactly who is holding what, when, and where. And I don't think it's going to be pretty. So I've been waving the caution flag so far, really, this year. We've had two pretty good little pullbacks, and that's all they've been is pullbacks. They've been saved. And there's an old saying out there, 3 times the charm. So be careful when the third one happens.
All right. Well, no matter what happens, Nick, it's going to be interesting, and you and I are going to cover it. So go over to inthemoneystocks.com. We got some gold trades on there and some other trades that you really need to take a look at. The gold trade, according to Nick, is shaping up to perhaps be the trade of the decade, even more extreme than the other trade that's on there. And make sure you take a look at the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz, emails KL@KerryLutz.com. Nick will pick up tomorrow.
Thank you, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.